Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, in this episode, we're focusing on the resources space, and we begin with gold, which continues to run higher and set new record prices on geopolitical risk, central bank buying, and more recently, the prospect of a US government shutdown. So, what's the best way of getting exposure? I put that question to Michael Gable from Fairmont Equities.
So the way I'm playing it for clients is we've got an ETF which captures over 60 gold miners, global gold miners. So that way, if there's an issue with one of these gold miners, it doesn't affect the overall performance of the vehicle. So GDX is one example. It's a Van Eck gold miners ETF. This is the one that we're invested in. I still believe this is a buy on any dip. And what this chart is showing is its performance compared to gold since around March last year. So I take March last year as the start of the latest breakout in gold. So we could see that the red line at the top is GDX and the blue line is gold. So gold's had a great run so far. It's up nearly 80% since that breakout, but the GDX ETF is up about 150%. So, and that makes sense. You tend to get, stocks tend to do about double, mining stocks when the underlying moves a certain amount. All else being equal, you often see that the mining stocks tend to move twice as much. Of course, the other way as well, if gold falls. But for viewers, have a look at the GDX if you're not sure which gold miner to pick up.
Is it an iron ore or a lithium stock, or is it still mainly a mining services company? That's the consideration for investors in mineral resources, which suffered from a series of missteps. Michael Gable looks at the technicals.
It does look as though mineral resources has bottomed out on the chart. It's one of those situations, I think, where, there were plenty of reasons to hate it. Everybody hated it, and that it was probably oversold. So it's cut through some major resistance lines. I think it's bottomed. Most recently, there was a major resistance line in the high 30s. And what I've circled on the far right-hand side is quite interesting, because as it got up to that resistance line, it spent about a month consolidating under it, and that usually gives it the fuel to push through and make another run. So it's breaking out yet again. This is something that I've been happy to pick up last week, and I think Min's going to have a run up to the next level at 55. So I think there's a good trade there.
Well, let's now focus on lithium with a look at the largest listed producer, PLS. There have been many false dawns when it comes to the battery metal. Here's what Rick Squire from Acorn Capital is saying.
Really commonly you see many false dawns before you do get a genuine recovery, and we've had probably a solid 18 months, nearly 2 years of decline in price, particularly for the larger lithium stocks, and Pilbara hasn't been immune to that downturn. But you can see from the chart here that from the end of June, the end of the financial year, it came off that bottom and it's had a really good run from that base. And a lot of investors, we actually picked up some of this stock ourselves in late June. We just saw that as a really good buying opportunity, and it's been a good performer in our portfolio over the last couple of months. But could it bounce sideways from here? There's potential to do that. But the good thing about Pilbara that sets this company apart from others is, yes, it's producing, but it's got a lot of cash and no debt.
Well, that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.